Morning Texas in high definition.
As we approach the end of the school year and some families are looking to move, there are some mortgage myths out there that can actually hinder the process. So we brought in our mortgage expert, Rodney Anderson, to debunk some of those myths. And Rodney, it seems the pearls of wisdom may come from good intentions, but it may not be the right thing, like that old myth of find the house first, then get pre-approved.
Yeah, and actually, Shannon, it's a big thing. I talked to a gentleman yesterday, for example, who was shell-shocked because here's what's going on. They were going to list their house, get the pictures taken today, have the house listed by Friday, and all of a sudden his realtor said, you need to get pre-approved for the next house. And lo and behold, his wife went self-employed 13 months ago, and she does not have 1 year or 2 years behind her. They can't get pre-approved to buy this house, and lo and behold, all of a sudden, the setback comes along. So myth number one, don't bother getting pre-approved. That is so false. Always get pre-approved in today's market. You want to know what your payments are going to be. Exactly. You want to know what type of loan is best for you. You want to know how much money you're going to need. But more importantly, the lending standards are completely different from 05, 07, 09. They are completely different, so it's really important to get pre-approved up front.
Okay, myth number two, get your mortgage from the bank where you already have an account. We tried this once.
Yeah, the banks don't know you really, okay? How many times have you ever walked into your bank? For most people, the answer nowadays, it's direct deposit. They never walk in. All they know is your deposit record. They don't know your tax returns. They don't know your income. They have nothing to do with any of that. They don't know what your credit report is unless you have commercial loans or something like that with them already, where every year you're providing their financials. This is a big deal. Shop around. There's mortgage experts that are out there that have better rates, that have better options and everything. And one of the CEOs of one of the major leading banks in America came out and said, I don't even know why we're in the mortgage business. Whoa. It's not very profitable for us. So they're coming out and saying, hey, we don't really want to be in that arena. So it's definitely important to shop around.
Okay. Myth number three. I can't believe people actually fall for this one by not reading the fine print. Are you kidding me?
Everybody wants to see a number and a payment. They don't even look at all the closing costs. They don't know what the fine print is, how many points they're paying, what it takes to get that interest rate. So I always tell people, are there prepayment penalties? Are there not? What if you pay extra money toward principal? What's going to happen on that loan? And especially for people, we don't do many of them right now, adjustable rate mortgages. You need to know what's going to happen at the end of 5 years or 7 years that could really boost that interest rate in case interest rates are rising.
Okay, myth number four. This is a two-parter. Always go with the lowest interest rate and borrow as much as you're approved for, even if you don't need it.
Yeah, always go with the lowest interest rate. Let's talk about that for a second. People will jump on the internet, and if somebody on a 15-year fix is quoting 2.99 and somebody is quoting 3.5%, which one are you going to click on?
I want the 2%.
2.99. But what happens is lenders charge points. They charge origination fees or discount points to get that interest rate. So the lowest rate in many cases doesn't mean the best deal. It means you're paying more. And every lender buys money from the same places. No lender is just going to be substantially lower. You got to watch out for the bait and switch, and you got to understand that.
Goodness.
And then number 5, borrow as much as you are pre-approved.
Don't do it.
Don't do it.
Don't do it.
Okay. Taxes are going up, right? Insurance is going up. Make sure you're qualified up front. Make sure you work with a great lender. And that's it.
All right, Rodney, thank you so
Shannon.
much. You can call Rodney at 1-800-EXPRESS for more tips and information, or you can go to rodneyanderson.com.